All right, doing another one of these back to back. This one is from 12/26/24, so day after Christmas. And let's go ahead and get into it. First off, disclaimer, I am not a profitable trader, so take everything I say with a grain of salt. These videos are a way for me to remain accountable with reviewing my own chart after each trading day. This is not an attempt to teach you how to trade. If you'd like to learn how to trade, please visit Max, Pat's, or Thomas Wade's YouTube channels, which I will link in the description. Now, at this point, Thomas was viewing the chart, same as I was, and he noted that right here, the EMA had held twice. You can see after those two larger legs up, the EMA holds once and two times, and the second entry long works. So the second entry long right here, it works. This is something that I did not realize at the time. I think I did notice that the EMA was holding there. That's pretty obvious, but I did not think about how the second entry long was holding there and what that meant exactly for negating the bearish bias. So at this point, I was still thinking that we're looking for shorts, even though you did get this little push up here. So here's how I was viewing it at the time. And this is a little bit later. I drew this range, which was correct, but I didn't adapt so quickly. And I should have, ideally, at this point, right whenever prices held the EMA and pushed up here, go ahead and said, okay, the bearish bias might be negated. I need to be a little bit more careful with shorts. I was still very gung-ho on going short, which ended up being the correct move, but I should have just been a little bit more careful. Now, here, I was looking to take the lower high here because at this point it looks like 1, 2 legs up, okay? Then you get this range and a breakout pullback of the range, expecting for prices to go short. So I was right with all of that, but I decided not to take it because prices are not quite touching the EMA, which is not the biggest deal because they're pretty close. But the main reason here is that we're so far from the EMA. So I was afraid the prices were going to snap back. Well, Thomas did take this one and he marked it as a high probability trade. So why are we willing to take a trade here so far from the EMA? And here you can see the same question, just in bigger letters here. Why is it okay to take a trade so far from the EMA here? Well, I looked at some similar ones, and here's one where it's not quite touching the EMA, and it's similarly very, very far from the EMA. So it feels kind of aggressive to take this failed second entry short being so far. So why is this one okay? Well, it's off of the key entry point. At this point, the downtrend right here has played out. So this has a break in new low. This downtrend has a break in new low, and you're willing to draw the uptrend wider because of that. So that's why we're drawing the uptrend wider here. And with that, it's off of the key entry point. It's clearly off the key entry point there. And the context is super, super strong. So after the downtrend played out, you get a very strong push to the EMA. You do temporarily push back through, but prices quickly retake the EMA and we're back above. So the context is super strong. You're willing to take it even though it's a little bit far from the EMA. Now, how about our trade here? How is the context? Well, you have the spike down. You have 1, 2 legs up. So at this point, we're expecting another move down. You have sideways action, which then has a breakout pullback. That's very, very strong context. And is it off of a key entry point? Well, kind of, because you have this support here that's now holding as resistance. So that all aligns there. Very, very strong context off a key entry point. Now, how about this one? This one is very, very far. Yes, it's touching the EMA, but again, we're very, very far from the EMA. This is a very big bar, and you're entering very far from the EMA. And Thomas said that he did take this one himself, even though it is clearly far from the EMA. So why do we want to take that? Well, he said at this point, you're clearly going lower because the range rules are clearly kicking in. So he skips this failed second entry, basically for the same reason, because you're too far. So if you look at this, you're too far from the EMA. This is quite a ways from the EMA, but he's willing to take this one because it's the lower high confirmation setup, and at this point it's clear you're going lower. So the context just becomes so clear here that he's willing to take it far from the EMA. So compared to this one again, I don't have as much to add to that, but I guess the context is very, very clear. How about this one? Even though this one doesn't work here, the context is so strong after a spike up and second entry long off the EMA, very good signal bar, Everything lines up so strongly. This downtrend already has a break and new low, so everything just lines up. The context is great, so you can't cherry pick, is what he says here, even though it is a little bit far from the EMA. Again, yes, it's touching the EMA, but the bar closes so far from the EMA that this one is still worth taking. So takeaway, the context needs to be really, really good, and in this case, it is really, really good. So that's why I should have taken this, even though it does close a little bit further from the EMA than I would have liked, and that's something to keep in mind. Now here is a kind of struggle area for me, when to expect another attempt at the break and new extreme. So you can see this uptrend here has a close outside, a break and new high, not even an attempt, it makes the break and new high here. So why am I still expecting a break and new high or another attempt at the new highs? Well, prices created that break and new high without coming back to the EMA, and it looks like one smooth move up. There's not really a whole bunch of sideways action before prices tested the new high. And for that reason, we are still expecting a potential move to test the new high again. So the break is not sideways at all, and if you go to a higher time frame, then it just looks like one leg. So this is what I need to be on the lookout for whenever I'm considering whether prices are going to retest the high again after creating a new extreme without touching the EMA. So that's a pretty nuanced area, but it's somewhere that I kind of struggle with. So it's something that I want to pay attention to. And at first I was thinking, okay, well, I shouldn't have drawn, if I go back here, I went ahead and started drawing this downtrend a little bit wider. So as prices kind of played out, I went ahead and kept widening it out like Thomas does here. And at first I was thinking, okay, well, if I was still expecting a potential retest of these highs, then I might want to keep it tighter like this. But Thomas doesn't do that. He widens it out. And the reason he does that is because prices have been so choppy and sideways, and we are playing at this point what could possibly be range characteristics. So you do want to play this trend as tight and as having a break and new extreme. You just want to also keep in mind that it could have another push to the new high, which is exactly what happened. So not a huge error there, but just something to keep in mind. So again, prices do end up coming back to test this high again. But at this point, I didn't really recognize what was happening. So I think my idea of the context would have been a little bit clearer if I had recognized that that's why prices were going higher. I was treating this as a range. So I was wondering, okay, well now this uptrend's played out, this downtrend's played out. Now we're moving back above the EMA. Okay, well, maybe we have this range here. And I think that's part of what kind of messed me up with this range. And it would have helped if I had recognized that, or what was happening here, and that prices wanted to retest this high again, because again, on the larger scale, this is just one move up and prices create a break and new high without touching the EMA here. I decided that I could not take this lower high here because the range at this point is not proven and it's too sideways. There's not really any rejection there. So you can see within this right here is all pretty sideways and stacked. And it didn't look like rejection to me. So I decided to skip this lower high, and I was correct, but not necessarily for the right reason. The reason that Thomas skipped it was because he drew this larger range here. And you can see all this open space on the bottom. It's too bullish. You only have one touch on the bottom here. So the range is not proven. So you just do not want to look to take the short just yet. It is not quite proven. So how about the failed second entry? And that's exactly what I was thinking. I was looking to enter the failed second entry on further confirmation. And so that's exactly what I entered. You did get a good signal bar there. And my thought was, okay, well, at this point you have 1, 2, 3 touches on the bottom and 2 pretty clear touches on the top. And now you have your full confirmation set up. You have a failed second entry long, good signal bar below the EMA. I thought this is a very solid trade. And even though the range is not super confirmed, it's not like the perfect range. I thought it was good enough. So why should I not have taken that one? Well, again, there is this larger range here, and I was playing a tighter range. So what I thought was confirmed, and I'm going to go ahead and there we go. What I thought was the confirmed range here was not truly confirmed. It was truly this larger range. And again, within that, you have all this empty space on the bottom here and here. And so there's clearly kind of a bullish bias to this. And after prices came off the highs, this downtrend played out super early. So this downtrend played out super early off the highs. And then prices returned to the highs. So that's a lot of signs that there could be a bullish bias here. But since I was playing this tighter trend, I did not realize the bullish bias. So how, let's see, why is it the range is larger here instead of smaller? Let's look at some examples. Here you have this uptrend here. So kind of similar uptrend. It has a break and new high. And then you go into this kind of tighter range here. So why is it that this range is tighter and we don't just draw a wider trend? Well, look left. So here's the initial trade. This is, the initial chart. This is the chart of the day that I'm actually studying here. Look left. So yes, this could be a valid range, but look back here where prices are finding resistance. So I think that gives us some more confidence that yes, we can draw it wider in that case. And you don't see that on this one. Of course, you can't really see anything, but back here, there's nothing where prices are finding resistance. So we want to draw it tighter in this case, I think. How about this example? So here we have prices, let's say we have this spike down, and ultimately it looks like you kind of have a break and 2 legs down. For the most part, that's kind of what it looks like, at least on a larger scale. Yes, you do have this downtrend with the break and new low, but on a larger scale, downtrend, break, 2 legs down. Then you have this uptrend. It plays out. Why are we drawing the wider range here as opposed to this one? So you can see at the time, this range would have technically kind of looked better. I mean, you have more touches on the low side. So why aren't we drawing this one? Well, same reason, I think, because you have this resistance back here, which can be dragged over, and you can find that same resistance here. Even though you only have one touch on the low side, you still need to pay attention to that resistance. And I think that's how you can find these larger trends instead of the tighter ones, or how I can find. Here's an example where it's a pretty wide trend, and Thomas finds it really early. And this is pretty different scenario, but just something that I found interesting. So here, the downtrend is so super strong. So you can see right here, I took the picture of the larger downtrend here. The downtrend is so super strong that the chances of reversing now are super low. So even though this downtrend here has a break and new low, so the downtrend has a closeout side and new low right there. So technically you would say, okay, well, we might get a reversal. But again, the downtrend is so super strong that the chances of getting a reversal are really, really low. And so Thomas draws the wider trend here, expecting that prices are more likely to go sideways than they are to have a straight up reversal. So they're more likely to dissipate sideways, even if you are going to have reversal to the upside. So even if you are going to move up at this point, you're kind of expecting prices to dissipate sideways for a little while before you decide whether you're going to go up or down again. So that's why he's willing to draw this range here. And I just thought that was interesting. Again, it's pretty different from the scenario that I'm looking at right now. But now we go back. So at this point, after prices had broken this high here, I went ahead and just ditched the range that I was playing, because at this point it just wasn't really holding like a range. And I started to look at this spike in channel here. And that was the correct move. Thomas's spike in channel does end up being a little bit different because he has this break here. But I think at the time, whenever I was drawing that, I think I played that just fine. Now let's look at the overall takeaways for the day. Pay attention to whether the second entry works or not to help determine the strength of the bias. That's something that I don't often do. It's okay to be a bit far from the EMA whenever you're taking a trade, whenever the context is super strong. And I think as a rule of thumb, sketchy setups can sometimes be okay in very strong context, and great setups can sometimes be okay in sketchy context, but I think that's less often. Remember that if something looks like one clear spike and has a break in new extreme without touching the EMA, then it can still get another retest. And so you don't necessarily want to expect it all the time, but at least keep that in the back of your mind and understand why prices might be doing what they're doing. So in the case that maybe you did have a strong spike and a break in new high, far from the EMA, then, you know, again, the what we saw earlier was this, where prices headed up higher. It can just help you understand the overall context better. So I just need to keep it in the back of my mind. And look left to determine whether to draw wide or tight ranges. Ask yourself, is there previous support or resistance at that level? And I did also ask Thomas about a couple of those questions, those big overarching questions. So if there's something else that he says that I think is important, then I'll go over that in the next review that I do. And that's it for me.